Hey, Courtney Smith here. I've got a pretty interesting situation developing here in the gold market. As you know, we've been long from all the way down here. We took some profits up in here. We're still long a lot, and as you can see, we've made a tremendous amount of money. Remember, there's 8 to 12 mega moves per year, and this is one of them. You've got to be long. You've got to be consistent and persistent. When the market was sitting here like this, who would have thought that the market was going to develop into this? Nobody knows. We always have ideas of what's going to happen going forward, but the key here is to be looking at the market as it moves forward, to be consistent and persistent of putting in the trades, because that's the key. That is the key. Now, there's several things that have developed here which I think are of interest. I want to go down here to this weekly chart. The chart here is of the, this is gold, but each bar is of 1 week. And notice how we've almost gone parabolic here. We're just opening at the bottom of every single bar. We're moving and closing at the top. Let me put it up here on this chart. Might be a little easier to see. But basically what's happening is open at the bottom, close at the top. 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 This is incredibly strong price action over this period of time. So we're making a lot of money in this market. We like that. That's always good. But what we need to be doing now is I'm moving it back to the daily chart. And what I want to point out is, notice down here that we're now at almost 51 on the ADX, which is way above the 40 level that I use to focus on the bishop. And what's going to happen here, let me describe how this market is going to play out. We are now into this exponential parabolic rise. And this is sometimes called a speculative blow-off. And what it means is that anybody who is short this market is getting squeezed hard. Anybody who is short here is losing a lot of money. And as a result, we're getting to see gaps in the market. Look at this gap right here. The gap is between the high of one day and the low of the next day. The gap right here, here's another gap right here where the market opened higher than the previous day's close. Gaps don't happen that much in futures now that we have 24-hour trading, but what it does is that it shows how much pressure is in the market. Notice also, too, that volume is running a little bit higher than normal here. We had a big squeeze day there. See that day? Big volume. And that was the day that had the gap. People were short covering. They were short and they decided to get out. They couldn't stand the pain anymore, so they bought back their short positions. That's what's happening, and that's what happens during the later stages of a bull market. Now, this market can go much higher, okay? Let me go back to this weekly chart here. I'll move it up here. One of the things that we can do is we can draw a horizontal line here. And I'm going to draw it right here. And I'm going to draw another one right here. And I'm using classical chart analysis to give us some idea of what the upside could be in this market. Classical chart analysis, this would be a head and shoulders. Here's the left shoulder, here's the head, here's the right shoulders, and once it broke this level right here, the market was going to move higher. I'm going to be talking about classical chart analysis more frequently and putting out a special video of it, but I'll introduce the concept here. And also what I want to do is introduce the concept of objectives. So in this case, the objective for a head and shoulders is that we take the we take the head, the bottom of the head. We can see that was at 695, and we go to what's called the neckline, which would be right here, and that's at about 1010, 1010. So if I get my calculator all warmed up here, I would go 1010, and I would subtract 695 from that, and I see that that's $315. So we would add $315 to the neckline, and that would give us $1325 as the objective. So that would be an objective up at this level here. So you can see we have still quite a bit of room to move before we get to that objective. So at this point, we could continue to see this speculative blow-off spike up to over $1,300 per ounce. At that point, I would become very, very aggressive at liquidating my position. Now, in the meantime, though, notice that there are no 5-day conditions here. The market is just running powerfully. Powerful running up here. So my stop on most of my positions is still way down here. The 20-day momentum, I'll start to be moving it up because we now have 20 days up here. But basically, this market is running hard and fast. So we just want to hang on as much as we can. However, we need to also, although we're looking for 1,300, that's another $130 on the upside, we also have to be very wary of the bishop. And the bishop will trigger a sell signal if we have 1 or 2 hard down days. So we're going to be looking very closely to see whether or not those down days occur over the coming future. So I'm long, I'm strong, I'm happily being long, but the next move that we're going to make is not to add to this position, it's going to be to liquidate this position for massive, massive profits. Let's keep an eye out on this market. It's going to be very, very important.